So here's another legal deception. This is perfectly legal. You have the fiduciary standard versus the suitability standard. The fiduciary standard is registered investment advisors and only registered investment advisors. Suitability might be insurance agents or registered representatives, more commonly called brokers. Brokers are salesmen. So I'm going to show you a clip from the series Frontline where they do a very good job of explaining fiduciary versus suitability or salespeople.
We don't have a standard way that the consumer can figure out who has the expertise to provide advice.
What's a financial advisor?
That is a term that means almost nothing. It is somebody who might be a financial planner, or it could be a broker who is really a salesperson.
There when you need them.
There are registered investment advisors, or fiduciaries, who are obligated by law to act in their clients' best interests.
Let's talk about the cookie-cutter retirement advice you get at some places.
But the vast majority of so-called advisors, around 85%, are not fiduciaries.
Selling their funds makes them more money, which makes you wonder, isn't that a conflict?
They are merely brokers or salesmen.
A fiduciary is a professional who, by law, is supposed to put your interests ahead of their own. Broker-dealers are not under that obligation. They have to conform to a suitability standard, which means they can't put you into something which is totally unsuitable for you.
This doesn't have to be the best thing that you could pick out for them. It's just something that's suitable. It's okay. I can't believe that somebody would want to get into a business and then stay in the business of merely being suitable.
Basically, your guy is out for himself to maximize his sales, and the way he does it is to be loyal to the mutual fund. And they try to sell you the most profitable products.
So how can you know when a financial advisor is really a salesman?
If you're working with somebody who is trying to sell you financial advice, you say to them, are you acting in my best interest here? Would you be willing to sign a pledge that says that you're going to act as my fiduciary at all times with all products? Because if you're not, then I'm going to leave. And it's really just as simple as that.
He paid for advice that was not appropriate.
To try and hold the industry accountable, the Department of Labor proposed a new fiduciary rule in the fall of 2010.
When retirement savings are at stake, advisors should put their clients' interests first. The critical question is what constitutes paid investment advice. The proposal we're discussing today will amend a 35-year-old regulatory interpretation.
The rule would require all financial advisors to put their customers' interests before their own whenever dealing with retirement accounts.
Today, there are trillions of dollars in each of these markets. The variety and complexity of financial products have increased and made fee arrangements far less transparent.
The financial services industry lobbied hard against the new rule.
It just seems that the financial services industry is really concerned about consequences.
They got the attention of Congress.
Our job here in Congress is not to preserve the business model that has existed for 35 years, but if you're going to upset that business model, we better know why, and we better know where we're going.
We don't need an alternative. We just don't need to do this.
The Labor Department pulled back their proposal.
People in the suitability business have very good lobbyists, and they've done a very effective job of creating doubt in Washington and concern about how something like this would be administered, about how the fiduciary standard would be enforced, about the costs of making whatever transition you would need to make.
The full political power of the financial institutions and the mutual fund industry was completely engaged in making sure that rule never saw the light of day.
They were saying the rule is too tough.
They were saying they don't want any rule.
They don't want to have fiduciary applied to them. They don't want to
because they're not really dispensing financial advice. They're just dispensing information and educational services, yada, yada, yada. Give me a break. They're steering you to the funds controlled by their company. Otherwise, you might leave and go somewhere else.
Okay, I'm going to get to that steering part in just a few minutes. But you heard on the video that the Department of Labor has been trying to get a fiduciary standard for retirement accounts since 2010, right? Only to be squashed time and time again. Part of the problem is they just made it typical government made it extremely complicated. The SEC already has a fiduciary standard through the Investment Advisors Act. I don't know why they just don't make anybody that wants to deal with investments become a registered investment advisor. The solution is actually that simple. It really is. But it's been squashed time and time again. Then in 2016, there was hope. They got the rule through. Again, a complicated mess, to be fully implemented in 2017. Then there was delays and delays and delays. And in 2018, it was killed again. This is just terrible, absolutely terrible. Us registered investment advisors, we were all for it. The people fighting it were the insurance industry and the brokerage industry. Absolutely terrible. Now, one good thing that came about from this rule is it looked like it was going to be fully implemented. So the insurance companies started creating no commission products for guys like me and Scott to have for their clients. And when you have no commission annuities or life insurance or that type of thing, what happens to the rates? The rates are better for the clients. So that was one good thing. And I don't think those are going away, because now that this is gone, the SEC is stepping in, the Securities and Exchange Commission is stepping in to take over to see if they can get something passed. They already have the rules in place. I don't know why they need to do something different, but they're going to try and make brokers and insurance agents have some sort of duty to their client instead of to the firm. So how do you check out a financial professional? Ask, will they state in writing? Will they state, are they a fiduciary in writing? Will you act in my best interest at all times with all financial products? You guys have probably seen this in some of our materials, in some of our emails that we send out, and in our newsletters. This is our fiduciary commitment to you guys. Royal American Financial Advisors is a fiduciary advisor. In keeping your best interests in mind, we will not accept any commissions, fees, or incentives from any third parties or financial institutions. We have made a commitment to only accept compensation directly from our clients. By making this commitment to not accept compensation from third parties, we eliminate various potential conflicts so you can have additional confidence that we are making decisions in your best interests. The product does not drive our decision making for you guys. Ask, does the firm you work for have production requirements? A lot of these broker-dealers and a lot of these insurance agencies, they are after their representatives to produce and generate commissions. So they want transactions over as many as they can. Ask, do you receive higher fees, commissions, and incentives and bonus money for selling certain financial products? Bonuses are rampant in that part of the industry. Ask, is your obligation to the firm or is it to me? Ask, do I pay you directly or does your firm pay you for product sales? These are all important questions to ask. Here's a great example of that. Brokers pushing Puerto Rico bonds.
Folks, in recent years, thousands of Puerto Rico residents lost their life savings. Many blame UBS, whose brokers sold them funds that were over-concentrated with Puerto Rico bonds that blew up as the island's economy crumbled. A CNBC investigation found that within UBS, some brokers raised red flags early on. Leslie Pickard joins us right now with part of her story, Broken Bonds.
Hey, Becky, that's right. We reviewed thousands of confidential documents, including internal emails, showing that employees at UBS were worried about the risks from selling bond funds to clients in Puerto Rico. But instead of fixing the problems, brokers were pushed to continue selling the funds.
So they were pushed to continue selling the bonds. So most of these insurance agents and the brokers, they are really nice. Most of them are well-intentioned. You know, they're thinking about the client, but they're paid for selling products and their duty is to the firm. So if they were paid by their clients, do you think they would have continued to sell those bonds? they would have stopped in. There's no way I'm going to sell that junk to my clients. My clients are paying me. But the firm is paying them to sell those products, so they continue to push them to sell them. And of course, they blew up. Here's another perfectly legal deception. The stuff I'm showing you here today, the vast majority of the investment public has no clue. Because we meet people that have brokers and insurance agents and all this thing, and they have no idea that this stuff is going on behind the scenes. Registered representatives, which are more commonly called brokers, can wear two hats. These large brokerage houses, they have their broker-dealers, and then they create these registered investment advisory subsidiaries. Then they allow the brokers to put a little bit of money or some money with the registered investment advisor, and it allows them to call themselves fiduciaries, even though they're working for the firm and part-time fiduciary. So when you're sitting across the table from a duly registered person, are you sitting with the fiduciary, or are you sitting with the commission salesman? You have no idea. Have no idea. It's perfectly legal, and it should be outlawed.